Does this sound like you? You bought into that IPO they told you was a good investment, and now you're down 20, 30, maybe even 40%. You try to buy the stocks they talk about in groups or on social media.
You've even taken a chance on the ones your advisor sends you via email.
But after 2 years, that IPO, that stock is still down.
There's a clear difference between investing and making a good investment decision. So if you're stuck, what you need to do is learn how to invest the right way.
In our Learn Level 2 program, we teach you how to build a $1 million investment portfolio. To make money investing, you need to know which stocks are right for your investment strategy, know when is the right time to buy and sell, and know how to build the right portfolio for your investment style. This program will help you invest meaningfully while making money. When you sign up, you'll get monthly guidance on how to invest and make money while doing it. You'll have a community of investors on the same journey as you to support you, and you'll have resources to help you stay on track. Join our 2026 cohort so you can get back on track with your financial goals.
All right, hope everybody is doing well. I wanted to do this series really to help those who are trying to answer the question of what can they do as it relates to their Scotia dividends, right? So this is definitely one of those videos where I have to do the disclaimer. I haven't done it in a while, but since I'm gonna be like naming some potential stocks, I think it's advisable to do it. So this video is not financial advice. Please speak to your licensed financial advisor before making any investment decisions. Had to get that one out of the way. I'm still not a licensed financial advisor yet, but I'm planning to be very soon. But as of now, I'm not. Right. So one of the talks that I've seen about Scotia Group planning to delist is persons are talking about the type of company it is. I saw an article today that says, if all of that capital should leave, it would represent about 10% of the JSE, and it's not an easy stock to replace, and so on and so forth. Now, I don't agree. So I think that, again, this is just a part of how the market works. I think companies delist is a part of just everyday flow of doing business. Now, you just have to be very careful about how you redirect your funds once you get them. And you also, as I mentioned in my last video about this, is that you have to weigh the cost to know. You have to really consider, if you're a Scotia shareholder, the opportunity cost of waiting, right? Because once a company has stated their plans to delist, it's just a matter of time, right? So you can either wait for it or you can start to position yourself. And we've actually seen some consistent dividend paying stocks just this week starting to move already, right? So that kind of tells you that the market is preparing for how those funds may be directed when the time comes. And as I teach in our level 2 and level 3 program, I was teaching them over the weekend that usually when the market anticipates something, the movement starts right away. So the market doesn't wait for the thing to take place. The anticipation of it is sometimes what will move the price, right? And so that's what I think you're seeing in terms of some stocks starting to move already, because there's no other factor that is known. Now, if there's something else behind the scenes that comes out, then maybe I can change that. But from what I've seen, there's no trigger for the movement in a couple of stocks that I've seen, based on where we are. So it's reasonable to assume it's in anticipation for this, redirecting of funds from what is expected to happen with Scotia. So typically investors want to get a head start. So you don't want to wait until the day comes to make the move. Some persons start to position themselves from now. So it stands to reason that you may be seeing, persons start to rebalance, however small. I mean, because it really depends, right? We don't know the full makeup as to how I think top 10 represents about 82%, if I'm not mistaken. We don't know where the other 18% resides, right? We don't know if it's mainly retail investors or unit trusts, pension funds, etc. We don't know, right? So now we don't make this channel for pension funds or unit trusts. We make this channel for retail investors, for everyday investors. And so everything that I say today is within the context of an individual, seeking to manage their own investments, right? That's what we do here on this channel. So what I'll share is a process by which you can consider. So let's say you are a Scotia Group shareholder now, and your thought process is, how do I replace this dividend stock in my portfolio? So again, everything I've said before. So you want to watch the video I did yesterday as well about my personal dividend strategy. That will help, and all the other videos I've done on dividends as well. If you've noticed a theme, it's because we have a dividend challenge coming up, and so I'm creating these videos to help persons have a set of resources that can help to complement the challenge that we're going to do next week. All right, so if you haven't registered for that challenge yet, be sure to do that. I'll put the link in the description of this video. All right, so so we spoke about the delisting at length already. I don't necessarily want to get in that. Now you have two choices, right? From that, you either wait and see what comes, or you take advantage of being notified well in advance of the thing, and you may choose to redirect your investments. Completely up to you. Some persons are saying they're just waiting to see, and then some persons have already started to rebalance their portfolios to accommodate what is to come, right? So it's a personal decision, right? Now we have to talk about what makes a lot of people feel like this is a big hit, right? So Scotia was the best performing financial stock, in my opinion, on the JSE for the past few years, right? So that's one of the things that makes this a little bit sad, or inconvenient for certain investors, right? Because it was a solid company. I think it was a leader in terms of growth, stable, consistent dividends, just solid overall company. So it's always unfortunate to lose a company like that in terms of a potential consistent dividend payer and strong company overall. So from that perspective, for sure, I agree with that. But as I said, again, companies can list or delist whenever they choose. All right. Now you have a couple of options to replace this in your portfolio, and this is how you want to kind of think about it. You can, depending on how you have your overall portfolio strategy, and I hope you have a portfolio strategy. If you don't have a portfolio strategy, then we have a portfolio consultation that we do, where I can coach you about how to manage your portfolio on your own, give you some things to think about, and it will help you to overall just be able to manage your portfolio yourself, right? Because that's what we teach. So if you're interested in that, send us a DM or just comment under the video, and I'll send you the information on it. But I'm gonna assume that you have a portfolio strategy. So let's say that you'd have been weighted in Scotia or weighted in the financial sector, and you said, oh well, okay, you wanted it either for a dividend paying stock or just exposure to the financial sector. If that's the case, then you have to say, well, how can I replace it in terms of a dividend stock, in terms of yield? And then how can I, whether or not you want to choose to now replace it within the financial sector or just with any equivalent strong dividend paying industry, right? Whether it's an infrastructure stock or some other type of stock, it's really up to you, right? So those are, just two other ways in which you can look for alternatives, either in the same industry or based on dividend yield. Now, the dividend yield comes down to your average price. I'm going to calculate the yield based on the current market price, but that's because I'm not a shareholder. I don't know your average price. And so it's really based on that. So if you've been holding this stock for 5 years. You want to calculate your average price, and that's the yield that you're trying to replace, right? Now, if you don't know your average price, ask your broker for a statement. They should give you that statement. It should tell you what was your average price and things like that. Certain brokers, I won't call any names, their statements aren't the most friendly. I won't call any names, but you get the statement and you can't tell when you bought the stock what's your average price or anything like that. It doesn't show gain or loss or anything like that. I won't call any names, right? But you want to calculate your average yield, and then you know how to filter companies to match comparable yield. So you want same yield or higher. And of course, price is a big factor when it comes to the yield, right? So it's never usually apples to apples in terms of price, but it can be apples to apples in terms of dividend yield. So if you, when you bought Scotia, the price was, let's say, $40, and you calculate the dividend yield and it works out to a certain percent, then you want to just look what's available on the market and try to match that as close as possible. Or you could say, well, there's an alternative in terms of, you know, financial stock that you could go to that is, you know, close to the same fundamental details of what Scotia brought to the table, and you could choose to invest in that way. But I wouldn't watch the dividend amount. I would think about the dividend yield. So for example, don't say this stock is paying me $2.50. Scotia paid me $2.50, so it's the same dividend. That's not the case, because it will cost you two different things unless it's the same exact average price that we're working with. Hopefully that makes sense. Let me know if you have any questions in the comments or so about what I'm saying now. All right. So the type of company you want to look for. So you want to kind of think about all the things that you would have loved about Scotia, right? So strong in the financial sector, consistent and growing profitability, expanding business, a business model that was kind of being built out in terms of the different lines of products they were exploring and the growth in, like the insurance sector, the retail banking sector, their mortgage sector, etc. The consistent dividend payments. I never even noticed that they paid dividends 5 times last year. That's actually pretty good to see. And from what I can tell, let me look at the chart. They paid 5 times last year, I saw. They paid once since the start of this year. They paid 3 times in 2024, 4 times in 2023, 4 times in 2022, and so on, right? So, I mean, fairly consistent, at least 3 times per year. And the amounts back in 2021 were 35 cents per share. Most recent, they've been at 45 cents per share, right? So at least the amount has been increasing. And so those are some of the things you want to look for, all right? So I wouldn't try to say, you know, all the things you love about Scotia or like the business side trying to replace that, because it stood alone, honestly, in the sector in terms of the overall business. There's a reason why certain persons kind of preferred it. I would say look for something that you can now focus on for based on what your needs are going forward, right? So, for example, somebody in retirement is different from somebody in their 50s or their 40s or their 30s. It really depends on what you were investing for. Now, if you had it in your portfolio, but you weren't necessarily investing in it for dividends, I think your decisions are kind of easier. And then you can just, you know, choose to how you want to necessarily go forward with that portfolio. All right. So think about the dividend yield. Think about the stability of the dividend. Think about whether or not you want to stay exposed to the same sector, or you're just focusing on the dividend payout. And then think about the stage that you're at in terms of your investing and how you want to kind of move forward with that new plan based on the current landscape. Because maybe when you first made that decision, it was many years ago, the market was different. Take a look at where the market is now, and you may have some opportunities there, right? So yeah, hopefully that helps. Now in terms of the options now, you know, what I will say is in terms of I kind of think of the options in a couple of ways, right? So for example, you can choose to replace it with something that's fixed in terms of income. So for example, you may choose a fixed income instrument like a preference share, you know, like a bond or something that will give you something consistent enough. Again, if it was in your portfolio specifically for dividends, if it was in your portfolio for capital gains and then you just happen to get the dividends as a plus, then you'd be looking for something in terms of a growth stock and not necessarily an income stock. So again, this gives you an opportunity to choose how you want to replace it, whether or not to focus on the dividend or focus on capital gains or maybe focus on both, right? So that will kind of determine the path that you go down. And so if it's just for dividend, that's kind of what I'm focusing on for this video, right? Let me just pause here and see if I'm making sense. Am I making sense, guys? Let me know if it's making sense to you what I'm saying here. Just doing a pulse check for those who are here. I know it's late, so you guys are probably like half asleep. Let me know. All right, I'm gonna assume that you're definitely all sleeping. All right. Okay. So, so apart from something that is fixed income like a bond or preference share, and as I said, I've kind of noticed that on the market every few months there's a bond. I think there's something out right now, if I'm not mistaken. I'm not gonna do any free advertising, but there are bonds out now, and preference shares usually can access those on the market, and you just have to be sure that you're paying as close to par value as possible. All right. So what you can do is, so let's say that you want to, so outside of, let's say you choose to go back into something that is a dividend stock, you have a few options, right? You can focus on, again, banking and finance that Scotia was already in. You can choose something that's in maybe infrastructure, so like Kingston Wharves, Trans Jamaica. Banking and finance would be like NCB, Sagicor, Barita, etc. And infrastructure would be like Kingston Wharves, Trans Jamaica, Panjam, those type of companies. And it would be good as well to go to, let me actually find that list of dividends paid from the start of the year. Some of these I may not remember. Let me go to January 1st. We're in 2026 here. All right, so I'm going to share my screen, and these are the stocks that have paid a dividend since the start of the year, right? So you just search JSE corporate actions, and so you just kind of scroll through and you see the companies that are paying here. So once you identify the yield that Scotia Group provided for you, then you can take that yield and then go through this list, and maybe even go through it for the past 2 years. Again, if this is something that you don't necessarily know how to do, you don't understand this process, you'd rather somebody to go through it with you, then we can do that one-on-one session to kind of help you go through it, to help you to understand how it works, to help you calculate the yield and things like that. Those are things we help you with for Learn, Grow, Invest. So look through this list, and you're choosing either to focus solely on yield or try to look at a company that has like similar fundamentals but not necessarily the same, right? Because they're really going to be hard to replace, like metric for metric, because again, they were kind of leading, I think, in terms of the financial sector. So all of these companies here, so for example, we have these JMMB preference shares like 10%, 7.15, 7.35, 9.5. You have companies like, I think the JSC is paying a dividend. So now somebody mentioned it, I don't remember where I heard it, that JSC is going to benefit greatly from that transaction. I don't remember where I heard it. So when Scotia delists that transaction itself based on the volume of the transaction, JSC is going to get a lot in fees. So who knows, JSC may do a special dividend or something, who knows. Kingston Properties has been, I think, doing well in terms of their business. They're a consistent dividend payer as well. I think Massey, no, it's Massey or Ace Bride, and one of them I hear is very good in terms of yield. You have Cygnus, you have Seprod, Trans Jamaica, of course. Those are the ones that stand out to me here. So you can go through this list, calculate the yield, and then the yield will tell you what to look for. If you're not choosing it based on yield, break it down by industry and kind of look to see, because you could be an investor looking for stability as well as that, because some persons just don't want to see their portfolio value go down, right? So for example, you could have just been looking for a blue chip stock and you just want to know that you have consistent payments coming in and not necessarily worried about any capital gains at all. So as I think about those clients who I work with who are retirees, who they're just like, well, Jermaine, I need X amount to come in and I just have my portfolio to do that for me. I met a gentleman who came up to me at the RPL AGM that says he watches my videos and that, he likes how I break down, my videos, etc. And he's been investing for dividends for quite a while now. Right, so those are the type of persons I'm talking about here. He seemed to be like in his 60s, maybe 70s, and so for persons like that, the focus is just getting consistent dividends, right? So you can choose how you want to have that broken down. Again, if you don't know how to do it, that's something that we can help you with. Outside of that, and I actually mention another option here that may be kind of out of left field for some persons. You can consider, now if it is that you don't necessarily need this money in the short term, one thing to consider is that through the US market, you do have the opportunity to invest in REITs and ETFs that are dividend focused, right? So for example, you calculate the yield. Again, you look for those opportunities. You fund that Interactive Brokers account. And then as it pays that ETF, you get those, as it pays those dividends, you can accumulate that, reinvest it if you're able to. And then maybe you get that money 5 years from now, 10 years from now, whatever, right? So that's also an option as well. Yeah, I think those are the ones that kind of stand out to me. So let me just kind of recap them since it feels like I might have been rambling a little bit. So you want to calculate your dividend yield for Scotia Group and look to see if you can find a comparable yield on the market. There are tools out there that should be able to help you to calculate the yield and find the top yielding companies. 2, you can look to rebalance into either the same industry or a different one. Infrastructure is always a good option. And then 3, you can go outside of the box and do an overseas investment, something like a dividend ETF or a REIT or something like that that's focused on paying income that you can now invest in and then just have those funds come back when the dividend is paid. It really just depends on your unique situation and what matters to you or priorities. I think the fourth one I mentioned is you can choose something fixed, right? Now I had a client recently who we were doing some math to find out how much they would need to earn in retirement to make investing make sense for them, right? So that is going to be important for those persons at that stage. If you're younger, really you just want to rebalance in something that's a quality company according to your goals. Your goals are either income or growth or value, right? Those are the three types of stocks I recommend you focus on. And so it's just to find the appropriate one for you, right? So hopefully this video was helpful for you. Let me know if you have any questions. I can answer. Georgia is still awake. Georgia is not past the bedtime or anything. Donig, wide awake and listening. Travis says no, still sleeping, or is that no, still listening? And Lavine says this is a money discussion, so they're wide awake. Trans Jamaica AGM, I'm not sure. Let me check their annual reports. You just gave me an opportunity to talk about the fact that, you know, LGI did that annual report. So happy to talk about it, of course. So let me check it. Should have an AGM notice in there somewhere. So I'll find it. I think it's sometime in July though, if I'm not mistaken. It says July 30th, all right? So July 30th at the Jamaica Pegasus. Yeah, so it's next month, right? Guys, I mean, so I'll come forth and confess that the reason why I'm able to do these lives this week is that Renee is out of town, and so I don't have to worry about how late I'm staying up. If Renee was here, I wouldn't be on a live stream at 11:40 on a Wednesday. So this is the last. So I wanted to do 3 videos. I wanted to do Monday, Tuesday, Wednesday. I've done that. Mission accomplished. And so back to regular scheduled programming come next week, right? I'm not blaming the wife. I'm saying the wife has provided an opportunity for me to connect with you guys sooner, right? Or more frequently. Great question, Georgia. So let me give you a peek into the dividend challenge. So what I'm gonna do, and as you notice, these videos that I've been doing have been very direct, right? So I have a new strategy in terms of how I'm seeking to help persons. So our goal is to help 300,000 people learn how to invest. That's kind of our vision for LGI. And what I want to do with that, or one of the best ways I've thought about, is for us to help persons make money or achieve a quick win by just investing in dividends, right? So we're trying to get as many people aware of the benefits of the stock market, as many people aware as to the benefit of investing in dividend stocks, specifically versus having a savings account. Now, investing comes with risk, but we want to encourage persons, right? There's 55 billion in the bank sitting down unclaimed, and there are persons who are just saving. Met somebody just last week who is saving, not investing, and so that money is just sitting in our bank account for the bank to lend it out. So we want to bring people's awareness to the benefits of dividend investing. And by the end of the 3 days, we wanted to have a clear plan as to your dividend portfolio, be able to forecast how much you're going to earn in dividends based on the value of your portfolio, and for you to be able to feel some amount of, competence or savvy as it relates to managing your own portfolio, as it relates to dividend investing, right? So that is the focus for it. In terms of content, we're going to be building it out similarly to the investment challenge that we normally do. We're just going to take the modules on dividends and just expand it. And then we're just going to kind of show you how to, evaluate a company for the perspective of looking to see if it's a good dividend paying stock or not, right? So that's the peak. In terms of slides or showing any content or stuff like that, I can't show that because I haven't done it yet. I'm doing it this weekend. But it's Tuesday, Wednesday, Thursday of next week. We go live at 7 p.m. based on the number of persons who've signed up, though, which is a good problem to have. We're going to host the challenge on YouTube, but then we're going to take questions inside the community, right? So I'm not going to take any questions on YouTube during the challenge. I'm going to ask persons after we host the challenge, which will take, let's say, about 30, 40 minutes max each day. We're going to go over to the community, and then that's where we're going to take questions, because persons can, turn on their camera, turn on their microphone, ask it, and we can help you in a practical way, as opposed to me just typing in the chat or me talking to you, through the screen. So we want to really help people. And so we're doing the Q&A in the community and not on YouTube. So that way we can get the most impact for persons, right? So that's how we're going to do it. So hopefully you've registered already, and we'll see you next, Tuesday, Wednesday, Thursday. All right. So Torg 712 says, I live in the US and just applied for Jamaican citizenship. Well, I hope it works out. But once you have, I think you can apply online for a TRN. Once you have a TRN, you can invest in the local stock market. And if you are in the US and you do want to learn how to invest, I can help you with that as well. Just send us a DM. We can have a one-on-one consultation, and I can help you to invest in the US markets. And I mean, there's a ton of resources that I can point you to as well to help you. But, so once you're interested in learning how to invest, that's why we're here. Our community is here. So we're on, if you check the description of this video, you'll see the link to join our community. So you sign up for it by taking our level 1 course. It's a free investment course. You take that, you get access to our level 1 community. And then in that community, we have different groups that will help you to, get support as it relates to investing. So let me just share that as well for you to see that, when you get there, for you to make your way around. So when you join level 1, the first thing you want to do is introduce yourself, right? So let us know who you are. We ask you to tell us how you found out about the community, what you're hoping to accomplish, what are your investment goals, and we ask you if you've done the level 1 course. And then you can, simply just use this channel to introduce yourself, right? So this is what all of these persons have done. If you sign up for the dividend challenge, then you'll be added to a special group. This is a private group that will only show if you're in the challenge. And then we'll have very specific questions for this community. And then, we'll go through the challenge for the 3 days, and all the questions related to the challenge are going to be in there. And then the rest of it, check out events to know when we have something coming up. So we have a check-in call coming up this Friday. You can RSVP for that. Join it. We answer questions, help persons get started. If you're a young adult, you can ask for permission to be added to our young adults group. This is a private group that I'll coach persons who are young adults. The coaching doesn't come at a cost. You just have to be an actual young adult, and with a desire to invest. We go through, I give them like homework. We talk about their portfolio, how to invest at that age and stage. Usually they're starting with $10,000 or $20,000 or whatever. And so I'm teaching them how to use that small amount of capital and invest it wisely. So we meet once per month. It's something that I'm just kind of testing out to see how best to help persons at that age. And then, of course, we have the Dividend Investment Challenge that is there. And we have 146 people who've signed up so far. The max for this is 200. So that's the limitation of the platform. So if you're interested in signing up for this, sign up now, because once it gets to 200, it's maxed out. So we can only take 200 people when we're doing the Q&A next week, right? So just bear that in mind. So that's our community. We have a mobile app as well that you can use to sign up. It's called Kajabi, and then that will, help you with anything that you need. All right. I think I've answered all the questions. Hopefully this video was helpful for you. Again, if you need help with your portfolio, we do coaching on that. If you need to learn how to invest, we have our level 2 community to help you with that. If you are trying to figure out what to do next in terms of like planning for your portfolio, etc., we teach people how to invest for themselves, right? We think that it's not necessarily safe to rely solely on one source for your information. You want to learn how to do it. You want to steward your own finances, and you want to be empowered to be able to make choices for yourself. The way that it should work is that you should partner with your financial advisor. You should come to them with questions. You should be able to have an engaging conversation with them where you understand the language, where you understand what they're saying to you. And it's something that it's not them just giving you a list of stock picks and that's it. You should be able to, pick their brain in a meaningful way and get value from that engagement. All right. So BZB says they have no TRN, so you can't invest. You can apply for a TRN online, I believe. For those in the chat, if you know that URL, just share it in the chat, please, where persons can apply for a TRN. So you can apply for it. But if you're not investing in the JSE, that's fine. Choose the stock market for the country that you're in and just start investing. If you're in the US, if you're in the Caribbean, if you're in some other country, just learn how to invest. That's the most important thing. And it will certainly help you to add. Well, there's no workaround. It's not hard to apply, so you can apply and get it, right? So it's not something that's going to be hard for you to get, or something that you have to pay an exorbitant amount of money for. You can just apply for it. So what I'll do, if you send me a DM on Instagram, I can try and find out, because I know my wife has done it for our son. So I'll find out where she went to apply for it, and I'm sure you can apply in the same way, and then you'll be able to get it, right? So send a DM on Instagram, and I'll just try to follow up, with it for you. But it shouldn't be hard to get it. Okay. All right. Have a good evening, everyone, and I'll see you in the next video. Sign up for our community meetup this Friday, and I hope to see you all there. All right, awesome.
Does this sound like you? You bought into that IPO they told you was a good investment, and now you're down 20, 30, maybe even 40%. You try to buy the stocks they talk about in groups or on social media.
You've even taken a chance on the ones your advisor sends you via email.
But after 2 years, that IPO, that stock is still down.
There's a clear difference between investing and making a good investment decision. So if you're stuck, what you need to do is learn how to invest the right way.
In our L.E.A.R.N Level 2 program, we teach you how to build a $1 million investment portfolio. To make money investing, you need to know which stocks are right for your investment strategy, know when is the right time to buy and sell, and know how to build the right portfolio for your investment style. This program will help you invest meaningfully while making money. When you sign up, you'll get monthly guidance on how to invest and make money while doing it. You'll have a community of investors on the same journey as you to support you, and you'll have resources to help you stay on track. Join our 2026 cohort so you can get back on track with your financial goals.